So the way this is going to work is it's going to be a 3-minute session of them pitching and then feedback and questions from the investor panel. In case you haven't checked, it's Jerry, Joy, Ricio, and Captain Cook who are going to pitch to the investor panel. Bill, if you want to get everybody on here. Yes, you may come out.
Hello.
Okay, Bill Reichard, Steve Goldberg, Amber.
Here yet? Am I on?
Kevin.
Now I'm on. Now I'm on. There we go. All right.
All right.
Welcome to the entertainment portion of our program tonight. So sorry we're running a little bit late, but we have drama, we have comedy. We'll see how it all works out at the end. But so what we're going to do right now, other than advertising Gatorade, sorry about that. So what we're going to do right now is you and the audience has selected the 3 most interesting companies to pitch. Did you already explain this, Nima, or not?
Yeah, kind of.
You kind of did? Okay,
you
all
can
right.
repeat.
So you know what we're going to do, huh? No, okay, so we're going to have 3 of the most exciting companies from earlier today are going to come pitch to our distinguished panel of investors, at which point we are going to have an open conversation in front of you as if we're in a partners meeting trying to decide what company to invest in. So you get to hear the inside process for the way VCs think about entrepreneurs and what they say behind closed doors. An uncensored view of a partners meeting at a venture capital firm. So with that...
Did you bring checkbooks?
They locked their checkbooks in their hotel safe specifically because they knew they were coming here today.
Awesome.
So, all right. So are we going to introduce the panel before we introduce the entrepreneurs or not?
Yeah, please, go ahead.
Is that all right?
Yeah, of course.
All right. So could I have each of you very briefly introduce yourself? Sure. Briefly, your name, your firm, the focus of your firm, and how you wound up being a VC.
Okay. So Marlon Nichols, I'm with Intel Capital. Intel Capital is a global equity and M&A investing arm of Intel Corporation. I focus on early stage investments in an area we call perceptual computing, which is essentially investing on the thesis that your interactions with devices should be just as natural and seamless as your interactions with each other.
Okay, Kevin. Perfect. Thanks.
Kevin Swan, I'm a partner with Inovia Capital. We have about $300 million under management, early stage tech fund. We generally get involved seed and Series A. We're very active. We have about 50 portfolio companies across digital media, ad tech, SaaS, e-commerce, and a few hardware and communication companies as well. And how you became a VC? By accident, which ironically is probably how most people would say they became a VC.
Got it. I'm Steve Goldberg. I'm with Venrock, which was, some of you may know, was the original investing arm of the Rockefeller family. But it's now an independent firm, 40 years old, over $2.5 billion under management. We're a diversified fund. We do everything from healthcare to social networking, wireless, enterprise, ad tech, fintech, whatever, just looking for great companies. And I'm kind of the science guy, so embedded systems background, and I do things that usually have some hardware or some hardcore, maybe math or signal processing. You could call big data kind of stuff. And how I became a VC by accident. Long-time operating guy, 4-time CEO, and I was the CEO for Venrock during and after the first internet bubble, and got to know them real well. And I guess that's how it happens sometimes.
I'm Amber Fowler, and I'm with Echo VC. We invest in small, I would say Series A, maybe up to B, technology startups in sub-Saharan Africa. And I would say very simple, easy solutions in tech, nothing innovative like rocket science or anything like that, but just early stage VC anchored out of Lagos and working predominantly in Ghana and Kenya and Nigeria with some outliers. How I got into VC, not to be repetitive here, but slightly accidental. I started on the other side of the table, actually working with startups in more of a kind of operational capacity, and then started, kind of made the switch over to angel investing, and then now to kind of a little bit more than angel, but not quite. Maybe it's micro VC, anyway.
Great, and I don't know, did Nima introduce me or not? But in any case, So my name is Bill Reichert, and I am Managing Director at Garage Technology Ventures. Garage is a seed stage and early stage venture capital firm. 2 guys in a garage, 2 gals in a garage, guy and a gal in a garage. You heard that earlier from Guy Kawasaki. So we're focused across the technology spectrum. Our thesis is that we're not smart enough to have a thesis. So we count on the wisdom of the entrepreneurial crowd to come up with the next great thing. And that's what we hope we have the chance to invest in. So with that, that's our panel. And now what we're going to do is listen, starting with Victor Wang, who's going to tell us the story of Jerry Joy. All right?
Thanks, Bill.
All right. Let's hear
Thanks,
it from
everybody,
Victor.
for your awesome support for Jerry Joy, too. It means a lot. All right, so I'm Victor Wang, founder and CEO of Jerry Joy. And when my grandmother was living by herself for many years, she became very lonely and depressed. And when she was diagnosed with dementia, my mom sacrificed a lot to return back to Taiwan and provide her with 24/7 companionship and oversight. Now, in the US, 16 million family caregivers provide dementia care. And the annual direct spending on Alzheimer's care is over $200 billion per year. And this is because of age demographics in the...
You're trying to click a slide?
Yeah.
We did that on purpose to test them.
There we go.
Which one?
Don't worry, we won't bite. We won't bite. We won't bite.
Yes, technology. Okay.
All right, here we go.
All right, sorry.
All
It's
right.
okay. So that's my mom and my grandmother. But so as I was saying, $200 billion per year just on Alzheimer's care in the U.S. And that's because of population demographics, where there's not enough caregivers in the U.S. And what that causes is extremely stressed out, highly burdened caregivers and very high cost of care. So thankfully, Jerry Joy is bringing joy to geriatrics, relieving the caregiver burden, and basically leveraging the global supply of human compassion and care. And making technology that works.
Just wing it.
Oh, okay. So we're leveraging the global supply of human compassion, intelligence, and conversational ability to pioneer this $4 billion US market in non-physical senior care companionship. And what that means is we provide these virtual avatars for companionship and oversight. And they take the form of these adorable little talking dogs or cats, which you cannot see, but I'm trying to show you. And there's a couple dogs and there's a cat. And basically what happens is our staff provide 24/7 companionship and oversight through the camera and microphone in the tablet, so they can see in here, and they can control. That was not supposed to go forward. Can you go back? Can you go back, somebody, or whoever's controlling this? Okay. So anyways, we're providing 24/7 companionship and oversight through the camera and microphone. Basically, it's a person in a tablet, and we can see and hear and feel the petting, actually, and our staff role play around the clock as this companion. And the key to memory impairment and cognitive impairment care is that while our staff work shift-wise around the clock highly effectively because we hire people in the Philippines, or highly cost-effectively because we hire people in the Philippines, and people are changing throughout the day and throughout the week, we are presenting a single, personal, consistent relationship with the person with Alzheimer's because they're memory impaired. And what's happening in California with the new laws is that you have all these caregivers coming in. It's very confusing. So that's really interesting. So let me just show you a couple of dementia patients interacting with the Jerry Joy Companion. Next slide. And there's no audio, I guess, but basically the companion is actually talking here. You can see he reacts really realistically to touch.
Oh, you're only saying that.
And whoever is doing this, can you hit the next slide?
Yeah.
Yeah. So it's showing a picture of the senior's wife who passed away due to Alzheimer's. And it's reinforcing positive memories.
Jim said that she loves
Dorothy. And then next slide.
Dorothy.
So that's our customer. And she actually filmed this video and sent it to us. But that's what we do. And the things that we talk about are like family memories, positive memories, family connections, things like that, hobbies. And then also in addition to just directly improving quality of life that way, we also provide safety monitoring and oversight in the event of emergency. Next slide, please.
Hi, my name is Tim Enfinger.
Yeah, this is something from one of our customers.
Your Joy companion for my mom, Mildred Enfinger, 79-year-old female with about stage 5 Alzheimer's. She called her little dog Peanut, and she talks to Peanut quite a bit. She's really opened up, and she's more conversant and outgoing now, and she really looks forward to seeing, talking to Peanut. And I would have to say that, in my opinion, I feel like Peanut has probably rolled back her Alzheimer's probably at least a year, and we've only had Peanut for a couple of months.
So the key here is that they don't even see it as a piece of technology. So we've built it so that for somebody with Alzheimer's that doesn't actually understand anything about computers or the tablet or the internet, they just see it as their friend, and that's really crucial to what we're doing. And then, yeah, basically I got my master's at MIT researching human-machine interaction. My co-founder is PhD candidate at the Computer Science Artificial Intelligence Lab. I have leadership experience as an Army officer. And we have an industry-leading board of advisors, seed investors. We're raising another round, so if any of you are interested, we can talk in private about that. But right now, it's questions time.
Okay, great. Thanks. All right. All right, a couple of cautionary tale lessons there for entrepreneurs doing an entrepreneur thing, right? In terms of you're doing your 3-minute pitch in 5 minutes. Okay, any questions? Any questions for Victor?
Yeah, I have one, Victor. So you mentioned round-the-clock care and monitoring, but you're using tablets, and tablets aren't mobile. And I'm sure, grandma has multiple rooms in her home. So how are you going to monitor grandma when she goes into her bedroom, but the tablet sits in the living room?
So that's a great question. I mean, in theory, they can get multiple tablets, but we're not really doing the job of like a GPS monitoring thing, right? So they can use that as a complement to what we're doing. We're not really like tracking their location, but we provide a much higher level of oversight where we're actually reporting how this person is doing as a human being, the kind of conversations that are engaging them. And we're starting to add in more things about clinical oversight and how this person is managing their heart failure self-care. So we provide a much higher level of oversight than just like, they're in this room or something like that. You can get like a tracking bracelet or pendant that will do that, and we can interface with it.
Yeah. So it sounds like you're going to use kind of the call center model in the Philippines. So
it's a distributed call center is what it is. It's a web platform, and our staff we hire in the Philippines, and they work from home, and we can provide oversight over what our staff are doing as well.
Just need a short answer, but my question is, it sounds like, one person, one patient, and although they're not going to be interacting all day long, sort of how do you rationalize how this scales?
Yeah, it's a great question.
I mean, you're doing a greater good thing, and so I congratulate you for that, but on the other side...
Oh, no, actually, it works much better at scale, because right now, it's not totally efficient, but at scale, it comes down to how many work hours we put in and how many direct conversation hours we put out to our clients. And it becomes highly cost-effective at scale because we can schedule based on demand, and seniors have very predictable schedules. And basically the way it works is at once we can actually carry on 2 conversations at once without sacrificing quality. And also we can provide oversight for like 100 different clients and basically teleport over and instantly keep them company for as long as that conversation takes, teleporting across the country to another senior. That's basically the power that the technology in the middle gives us.
I have a question. How are you measuring the success of, for example, if you're dealing with people that have dementia, walking out of the room, forgetting that their pet exists, and then they're now in a new part of the house, and so how are you measuring how effective this is and whether or not this is actually something very helpful?
Yeah, it is something very helpful. We just put out our year-long case study of one of our early paying customers. She's been with us for over a year, and the engagement level is around about an hour of interaction every day, averaged out through the whole year, and we do an analysis on it. It's not decreasing, very consistent. And the way we do that is we'll call out to them. When we pick up on ambient motion and sound, when they come in the room, we'll call out to them so they don't forget about us. But the fact is they actually do remember us very easily because we're there 24/7. And you have caregivers coming in all the time, but we're there 24/7. So if they're able to form any memories at all, they form a memory of us. And we actually have paying customers where their father had a fall, they take it to the hospital, and they bring the dog to the hospital to keep him company because we're like his friend and family member now.
So it's a supplemental service because you recognize that you're going to need the in-home. So then
Exactly. That's exactly what it is, and we're marketing it to private duty home care agencies. Typically, a very typical client of a private duty home care agency gets 3 or 4 hours of care per day, and that adds up to about $2,000 a month. And they can't afford round-the-clock care, and this is filling in that gap between.
So what percentage are you expecting that you're going to be filling this gap? Because I mean, if it's supplemental on top of what they're already paying, then it's already a very expensive process for the family or for the the person, the patient. Mm-hmm. And so how does your kind of if they're doing it an hour a day, for example, they're still going to need 23 hours of support.
Right. So typically they pay like $2,000 for a couple hours a day of home care per month. And the Jerry Joy service publicly costs $259 or $249 per month, and we market
Flat fee?
Including all the hardware, software. It's shipped to their door. They just plug it in. It's ready to go, and it has our staffing. And then later on, right now we're marketing to private duty home care, people that can afford it, right, privately paid. But then later on, as we add more conversational automation and AI, we'll be able to bring down the costs and one or the other significantly increase gross margins or start to offer it to people of lower income.
So I'm not sure we understand yet whether or not, maybe you guys do, but I'm not sure we understand the economics of this because I'm not sure if you're replacing a person or not replacing a person.
We don't like to think of ourselves as replacing people, right? So if you have time to go in and talk to your parents.
Okay, but just then give us because if you're not replacing a person, then the economics are purely supplemental. That's what we're hearing. Is that your intent?
Actually, there's a lot of potential cost savings because we're doing more clinical applications where we're leveraging our friendship to ask things like, have you been propping up your legs when you sit down, which is very important for heart failure. So we can leverage our friendship into a healthcare coach and companion to prevent hospital readmissions.
But you're not reducing on-site healthcare personnel time. Is that what you're saying, or
we
not?
do.
You do?
We do when you consider that an RN would have to go in and administer some survey and collect data from this person and coach them on their self-care behavior for heart failure.
Maybe some metrics on how you actually work out that equation, because I see it right now is they still need the person, and this is some kind of supplemental assistance, but I don't quite see how you guys kind of scale and that becomes a kind of relevant solution long term.
So I'm confident you have an answer, but we've run out of time.
Sure.
So, what?
Could you just describe one situation where it didn't work? Where you had a customer that it didn't work out for?
Yeah, well, I mean, one person it's very variable with dementia. One person was just like, oh, this thing is doing weird things to my body, so we just took it out for her. It's a little bit unpredictable. I mean, we work for probably like 80% of people, but then because they're not able to be cognitively reasonable, sometimes with anything, weird things can happen with dementia.
Okay.
Yeah.
Well, with that, thank you so much. Everybody? All right, thanks. All right, next up, we've got Ricio.
Ricio.
You're Ricio.
I am Ricio.
Good to see you.
Good to see you too, Bill.
Welcome on stage.
Thank you.
Okay, knock
Ready?
our socks off.
All right.
All right, 3 minutes.
Cool. My name is Mark Thomas, and I'm the co-founder and CEO of the real estate technology company Ricio. The #1 problem in the real estate industry right now is a lack of accurate data. So brokers and agents, when they create listings in the MLSs, they are using old, antiquated technologies that the MLSs have forced upon them to create, update, and market their listings. And the MLS system is centuries old and completely broken. So we are trying to replace the century-old MLS system with a much better platform. Well, then you might go, well, what about Zillow and Trulia and other portals like that? They have done it, right? Wrong, because they get all of their data from the MLSs. So if the real estate agents aren't using the MLS's technologies to create, update, and market their listings, when the MLS is syndicated to the portals like Zillow and Trulia, it's going to be wrong there as well. And what we've found in the past 6 months, since we last raised a round of seed funding, that over 52% of the data that goes into the MLSs is wrong because of the cumbersome and antiquated technology that they have. Ergo, garbage in, garbage out. When it goes bad into the MLS, it goes bad when it gets syndicated out to the portals. So what has Ricio done? Ricio has built, or is building, a national MLS system. And what we've done is created a technology that allows real estate agents to manage all aspects of their deals in the cloud in real time. This includes everything from document e-sharing and e-signing to compliance and workflow management. All parties of a real estate transaction come into the Ricio dashboard to manage their deals. Because of this, we know literally where everything is at in real time with every transaction. And what we can do then is do what the MLSs don't do well, which is take that data and syndicate it to the portals and have it updated in real time where the real estate agent's able to fully control everything that they include. We have over 6,000 agents and customers, brokers and agents on our platform. I'll talk about the growth in a little bit. It's a huge market. So there's 2.5 million real estate agents out there in the United States right now. They spend on average about $100 a month on MLS subscriptions, about $450 a month on marketing subscriptions. So this is $16.5 billion that these 2.5 million real estate agents are spending on MLS and marketing technologies. So since we raised the seed round of funding last fall, we've gone from about 2,500 agents on the platform to over 6,000. Now, we aren't currently charging for our productivity tool for real estate agents to use the product. However, they all have to have paid DocuSign e-signature accounts, which is about $15 to $20 a month. So they are vested and are interested in using the product. They use it multiple times per day to manage every aspect of their deal, and that's how we get the real-time data. The next steps for our company is we are launching some paid marketing features to upsell these brokers and agents on our additional products and features that we have. So yes, we are doing zero in revenue right now. In 2 months, though, we already have $50,000 a month in pre-subscription revenue. So we already have 250 agents who have signed up to pay $200 a month for our product. We have a great team, so we have over 20 years of combined real estate and technology experience. We have awesome engineers on our team. We have great real estate technical chops on the team as well. We raised a $1.1 million round of seed funding last fall. We are currently raising a Series A of $4 million to scale the number of brokers and agents that we have. We're looking to get to 370,000 agents in the next 2 years, which will upsell 58,000 of those at an average monthly subscription of $99 a month. We have about half of the round closed right now, and we're looking to raise the other half in the next month or so. Thank you.
Okay, great. All right. Thank you, Mark. Thank you, Mark. All right, questions for Mark? Steve.
Oh, go ahead.
Oh,
go first.
Sure. Okay. Quick one, Mark. Good job. Correct me if I'm wrong, but is MLS not mandated by local real estate boards? Like it wasn't like a startup that just got everyone's attention. It was like basically all the realtors have to use it.
Yeah, they're owned by the brokers in that area. And so that's really the problem, is that they're all locally, individually owned and operated, and it's really a power struggle. It's really the 4 or 5 or 6 brokers that are on the board of that local MLS that really tell everyone else what they need to do, and those other people that they tell what to do, they hate it. So they're looking for change. They're looking for alternatives. And unfortunately, because, like I said, the MLS system's a century old, it's been difficult to do.
How much, I mean, it sounds like, you know, the data is very important because you opened with 52% of the data is wrong.
Yeah.
So how much scale do you need in a given market before you think people will start to recognize the value of your service?
Well, 2 things. One is I actually don't think that the local market penetration is that important because we are playing off the existing portals that exist out there like Zillow and like Trulia. What we are really doing is offering a service to the brokers and agents to allow them to control where their data is going. Right now, they're at the complete mercy of the MLS. Some MLS is syndicated to certain portals, some don't. Some delay it to sending it to certain portals, some don't. They don't have choice right now over...
So the people that pay you, it benefits them directly because their data is going to be good, independent of anybody else's.
Exactly. So it really doesn't matter about local market penetration.
okay. Any other questions?
Just one other thing. In fact, our 6,000 brokers and agents are all over the country. So,
Yeah.
So could you walk us through the power struggle issue
Sure.
here in terms of how the MLS guys are going to react to you and how you're going to be able to either side stream or defeat them? How is that going to play out? I'm not quite getting the politics of it.
yeah, you really don't have to go to the MLSs or worry about them directly. What you have to do is go after the brokers. So the brokers all own independent franchises. Sometimes it's multiple offices, but nonetheless, it's independent franchises. And the brokers are the ones who control what their agents do. Agents legally have to work underneath brokers. And so it's the brokers who make the decision to use products like this because they're the ones on the hook from the standpoint of a compliance point of view. So for example, the Department of Real Estate is the one who will, they'll keep the broker on the hook if an agent screws up. So the brokers are the ones who are really deciding what kind of tools and technologies to use. And so ultimately, all you have to do is win them over. And then it really doesn't matter what the MLS
but that's
is
not
like.
trivial, right?
Well, it's like going after small business owners. So real estate brokers are basically small business owners. They have anywhere from 10 to 500 agents working underneath them. The average broker size in the United States is 24. So you're basically going after a small business and trying to win them over to use your technology.
So that sounds like a lot of feet on the pavement, right? How do you sell to all these different brokers? What's it going to cost you?
Yeah, so our customer acquisition cost is about $21. And that actually has a lot to do with the virality of our product. So real estate agents are inviting other real estate agents in to do their deals. So the listing agent will invite the buyer's agent. That buyer's agent goes, hey, this is cool. I'm going to create my deals in here as well. Brokers, obviously, because they manage compliance, they invite their agents in. So we do pay for email marketing. We do a lot of email marketing. We do a lot of social media. And we do a lot of conferences and in-person events. Because the reality is real estate's still a people industry. You know, people want to meet other people. They're salespeople themselves. They want to meet you and talk to you, especially the larger brokerages of, say, 250 people and more. But we get about 32 free users for every 100 we pay for, just because of the fact that they invite their agents into the brokerage and into their transactions to do their deals.
So what's the timetable that you envision? Because they're going to have to be using both systems in tandem until your system is populated with enough data that it becomes useful for them, right? Or useful for the majority to actually rely on and use, because otherwise at the beginning there's not very much data and they're going to have to use the old MLS system.
Yeah.
And so what's that timetable, and how much does that cost you in terms of runway?
Yeah.
In order to get there?
Just to quickly talk about revenue runway. So, the seed funding we raised last year, we have enough runway for another 10, 11 months. But in terms of getting the paid features ready that will allow for the syndication of their listings to the Zillows and the Trulias of the world, we're going to have that up and running by August. And that's all that really matters, because if you're doing the same thing that the MLSs are doing, but you're doing it better, and you're giving them a one-stop shop for all the other compliance and workflow and document stuff that they need to do, which the MLSs aren't doing, it's the best of both worlds. So we don't have the piece yet, and that's the part that's coming. That's the paid feature part that's coming from a marketing standpoint, is launching in August, is the syndications feature.
So you're a little different today, right? Because you're adding some services, but from a technology standpoint, there's not a whole lot that's differentiated, right? And I could see someone else, your clone, getting up here 2 months from now and saying, we're going to do the same thing. How do you protect against that?
So I actually thought that was going to be a huge problem going into building this, even though I have about 10 years of real estate experience. And about 6 months into it, realizing how much legalese and compliance goes into a product like this, it's not trivial to build. And real estate agents and brokers, and this is why we're doing this, the number one thing they want is everything in one place. They are so tired of having one system for CRM, another for transaction management, another for marketing, lead gen, and so forth.
How long did it take you to build it?
So right now we're at about 18 months. So everything except all the marketing and lead gen stuff has already been built and up and running. It's not trivial. It's a lot of details, a lot of legalese, a lot of compliance that goes into it, and understanding roles and permissions and that sort of thing. It takes a really strong team with a balance of both great real estate and technology experience to really pull it off. There's really only 2 or 3 main competitors that we have right now that we go up against when it comes to winning these agents and brokers business.
What exactly, I need to go back to the MLS relationship. What exactly is that relationship with local real estate boards? Because is it not mandated at this point that they have to use it?
No, they don't.
So why has there never been anything else emerge? Because MLS has been around for a long time.
So why has anyone disrupted the MLS? Is that kind of what you're asking? Yeah. Well, kind of going back to what I said before. So real estate's been a little bit of a dinosaur in that it's been pretty slow to change. Real estate brokers, if they realize that everything is there for them that they can do, and there's not really a better way, they're just going to do it. So they're not like, oh, I'm going to go out and look for this new kind of technology that does X, Y, Z. You have to really sell them on the benefit.
You realize, right?
What was that?
This is not working for you, this argument, right? Because you're saying they're sticking with the normal, right? And so you're going to have to work against that.
Yeah, but what I'm saying is
why now question.
If you give them great technology, which we have, they will come. Trust me. So we've grown, like I said, we've grown 140% in just 5 months.
Okay.
Now, I understand it's not huge numbers, but
I've been given the hook. All right. You've been given the hook. Mark, great job. Great job. All right. Yeah. You'll give it to me next time. All right. So now I get a timer, huh? Now I get a timer? All right, thanks. All right, next up. Hi.
Paulina.
Paulina. Great to have you. Your company is?
Captain Cook.
Captain.
I'm trying to figure out how it works.
Okay, they'll solve the problem for you. Are you ready?
No, I want to
Okay.
come back.
Somebody hit one.
Okay.
All right, Captain Cook. All right.
Once again, I'm Paulina, and I'm Captain Cook.
Ah.
About 10 months ago, I had two problems. First of all, I hated the question, what's for dinner tonight? And second, I always used to promise myself on Sunday that next week I'm going to be cooking more and more healthy stuff, but already some kind of like on Wednesday, my motivation dropped down. So I created Captain Cook in order to fix weeknight dinners. Since then, I have found a team, and we have created the mobile app. We have launched in Germany in January. Until now, we have around 100,000 downloads, and all of them are organic. We are proud to be supported by the community of food bloggers who are giving us advice and also recipes, and also promote us to their communities. And we are also very proud to have very active and very engaged users. Next step would be to launch Captain Cook in the US. That's why I'm here, and we've been accepted to Plug and Play Accelerator, and for the next 3 months we're going to be staying here, and yeah, we will launch Captain Cook also here. So, nowadays people are overwhelmed by the amount of choices in terms of recipes and in terms of products. That's why the majority of them hate grocery shopping. Second, cooking is like exercising, so you need ongoing motivation. So if you're exercising with your body, it's like your motivation or your dropout rate is 3 times lower as if you're exercising on your own. It's the same with cooking. Second, we are targeting the big market, the market of mobile ads and mobile coupons. It is growing, and marketers have realized already that mobile coupons are 10 times as successful as paper-based coupons. So they invest more, and we're going to be there to facilitate them. I can, doesn't look nice. I can explain Captain Cook's solution in 3 words. It's simplify, curate, and engage. So we simplify the decision of what's for cooking tonight by offering only 3 recipes a day. But these recipes are pre-selected by us, and they're like really cool and nice recipes. You're not gonna want to miss them. Second, we curate the choice of the products by pairing the real products with real prices from grocery stores around you to our recipes, so you have the whole information. And the third, we also solve the motivation problem by engaging you with the cooking community, because Captain Cook is the first mobile app that turns cooking experience into an engaging game when you can discover recipes, you can get engaged with your community, you can get support from your peers, you can level up and get real-time rewards. Our business model is pretty straightforward. Our recipe's life is very short, it's 24 hours. So in order to save the recipe for longer, you can either earn the recipes by engaging within the community, by uploading the pictures and so on, or you can earn the points in order to buy the recipes. Second, and the biggest revenue stream, is actually mobile ads and mobile coupons. So our approach to this is to eliminate the whole noise around the mobile coupons. So we are not going to be offering you some kind of 20 cents discount on Coca-Cola if you're just wanting to buy a recipe. So it's very focused and very easy to understand and very simple. And the third revenue stream is coming from commission from sales within the app. And it's revenue stream for the future, because now mobile grocery shopping is very small, but we assume that in 5 years it will be big, it will take off, and we will be there. Thank you.
Okay, thank you. All right. All right, great. Okay, Steve.
So, the revenue stream that jumped out at me was the mobile couponing, which is a pretty noisy market. There's a lot of people out there doing that kind of thing, and I'm assuming you're going to talk to either supermarkets or brands to offer up, and they're going to pay you to distribute these coupons. So how have you done in that regard? Have you talked to, and you know, in the world that I live in, we're kind of looking for big hitters. So have you talked to the big players, the guys that, you know, are very, you know, millions of dollars of couponing revenue or
yeah,
payments?
I must say a bit of our story. So in the beginning, like, no supermarkets wanted to talk to us because we were just like simply too small. Right. After we have launched, we're still too small, but supermarkets in Germany have started to reach out to us. So we're going to be implementing 2 more supermarket chains in the app in the next month.
Do you think it's more the supermarkets or the brands?
This thing is more the brands. So we're not going to be charging supermarkets. At this point, it's more brands. We have talked to brands back in December. So that time they said it's very interesting because we're offering focused coupons. And yeah, we influence the decision at the point of sale. But I cannot say that we have like already signed deals because we are simply too small. And I think it is important for us to grow the community at the moment, what we are doing, and then to reach out to the brands, or maybe they will reach out to us.
Thank you.
Yeah, thank you.
Okay.
Yes.
Yeah. Go ahead. Oh.
Scale, right? So you talk a lot about curation, and it didn't seem, at least from what I heard, it didn't seem like it was automated curation, right? So it seemed like your team was taking in some data elements and processing that, and then feeding it back to the consumer. How do you scale that?
Yeah, it's actually for us, because we are offering only 3 recipes a day, it's not too difficult to prepare the whole stuff. At the moment, we're not doing this manually. We have a back end, and the data from the products and prices is already engaged with the recipes, so we're not doing this manually. And we're going to be scaling because we are growing the number of users. And how we grow the number of users, we're reaching out to more food bloggers who are promoting us to them.
So is everyone on the app getting the same recipe every day?
Yes. So there are 3 recipes, but it is always something with meat, vegetarian, and something low carb. So everybody finds something for himself.
Got it.
Yeah.
Right. And then if you want, you can buy recipes
Exactly.
for later use, or so
Yeah.
if you'd like to. Right?
Exactly.
That's part of the
Yeah.
idea, right? So, sorry. Yeah.
Oh, I was just going to say, can you describe a little bit more about the kind of revenue model that you hope to achieve, like how that's going to take off and kind of how you see that going and what timetable?
As I said, like the first revenue stream and probably the easiest one would be in-app purchases. So because we are already engaged with our community, and the next step would be to introduce this gamification point. So the first would be people buy the points, or they earn them, like engaging with the company or with the community. And this will be our first revenue stream. But the biggest revenue stream, but it will come later on, probably next year first, when we are already bigger and we can talk to the brands. So it will be through mobile ads, because we have in our shopping list already real products. So it's already brand placement now, but we are not charging yet. This is the thing. And the third one, what I was talking about, and I had to stop, is next thing, we've been also approached by 2 online stores in Germany who are delivering food, and they want to also be a part of our community and deliver food. So we'll also implement ordering within the app. But today, mobile shopping for groceries is very small, so I assume that will be our more future revenue stream, what we can target, definitely.
So first thing, just as feedback, you need to change the name in terms of like the spelling, because if I like told my wife, she would not be able to find it just because of the. Is there a reason why it's KPTN?
Yeah, it's the German spelling.
Right, we figured
Okay,
that.
so that's my ignorance. So when you launch in the U.S., you need to change the name.
Yeah.
When I first heard, so my wife loves to cook. She hates to decide what to cook. So right away, it resonates with me. The problem here is you've heard over and over, is scale in any kind of consumer product. So how do you, and in the App Store, it's kind of a the rich get richer world if you get to the top of the charts. And it seems like you've got some pretty good numbers. How do you scale this in an economical fashion to get it out there? Have you played around with any kind of different user acquisition channels, mobile download?
At the moment, it was the most of PR. So we were reaching out to different media, and they were writing about us because there is nothing like that yet. And also, like as I said, the biggest customer acquisition channel is through food bloggers, because there are so many of them, and we create the win-win situation. So we are promoting food bloggers in our app, so everybody can click on the link and go further and discover the food blogger. And for us, it is also beneficial. First, they're giving us recipes, and second, they're promoting us further. So this is one. The second one, what we are talking also, like my experience from German stores, now they want to be a part of our app, and they are also willing to promote us to their communities. For example, like smaller grocery chains, they want to let know the customers that they're already inside, that they enable this service, and they're going to be promoting us also via social media and via local flyers or something like that. So.
I need you to talk about the competitive environment or the landscape, because there's so many solutions for this problem, right? So so I mean, I get that people are concerned about what's for dinner tonight, but there's so many ways to solve this problem.
Yeah, definitely.
So what are the main? How do you beat that?
Yeah. So there are really like huge amount of competitors, but how I see it, there are different amount of cooking apps or recipe platforms, and they are offering only tons of recipes, you know. Okay. There are also shopping list apps, and they are offering only shopping list, you know. We combine this, And also offer on top the community of people who engage with you and who motivate you on a daily basis.
Okay.
Yeah, go ahead.
Can I just ask a quick, how do you, so for example, I'm a pretty finicky eater. And I would say that if I only had 3 recipe choices, I would probably lose interest because I would think it was stale, and I would also want to like ask somebody else, is there a better recipe? So you're going to lose me. Like, and so how do you get people back? And have you had any like beta tests yet to see like how people stay engaged and how long they stay engaged? Because that's going to be part of how you have greater market share.
Yeah, so now we have 40,000 monthly active users, so it's about 40% of our downloads. And people stay, and we see in the app that the traction is that people use actually the app almost every day if they're in. There are, of course, people who are like, I don't know, like creative themselves. They're not our target group, you know? Right. But we are offering help for people who cannot decide. And there are like huge amount of them. So how we let them motivated by daily changing content. They really love it. So we have one guy, just one short example. He set an alarm clock for every day, just to open the app and to check the recipes, not to forget about that. Yeah.
Okay. Okay, great. Thank you very much.
Thank you.
Okay. Good job. Okay. Okay, team. So let's close the door here and have a little chat, huh?
All right. Stay in a back room where they can't hear?
Yeah, they. I don't think anybody can hear us now, right? Okay, so let's see. So we have Victor with Give Joy, right? What? Jerry Joy. I'm sorry. Jerry Joy. Thank you. Victor with Jerry Joy. Mark with Ricio. And Paulina with Captain Cook. With a K. So what do you like about each one of them? I mean, what, Steve?
Well, okay, so there's always something to find to like. I thought Mark's presentation was very, he spoke, it's always a good thing to speak quickly. He got a lot in, so I got a lot out of that one. And so it seemed like he was a realtor himself. He knew this market. He's got a plan for paying customers. I've always felt that the MLS system was sort of an antiquated kind of thing, and sort of, it seems like one of those markets that due for disruption. Apparently it's very, very fragmented, and there's different MLSs in different markets, and they're run different ways. So it seems to me that the real estate market could probably use a little bit of a.
So you like what he's going after.
So I like what he's doing.
See, that was credible.
Now,
what about Jerry Joy? Was there anything?
Yeah,
that one jumped out to me just because it's, as soon as I meet a company, it kind of immediately falls into 2 buckets. One that is just, I would call it the interesting bucket. I've not met a company focused on geriatric, compassion, care, kind of thing. And that just kind of intrigues me right off the bat. I don't know enough about it. You'd have to really dig into it. And then the other bucket is just kind of when you have an instinct already built in, just from your previous experiences in research in a market and meeting other companies, which I think Mark would more fall into, and Pauline. So the Jerry Joy one really intrigues me just because it's different. It's not a Me Too startup, but I just don't know a lot about that market though either.
And about Captain Cook, anybody have a sort of thing you like the most about Captain Cook?
It's something everybody can relate to. I guess the thing that jumped out at me was it's extremely crowded. We've seen so many couponing companies, and so when you have a crowded market, you're really looking for that hook, and I'm just not sure I saw the hook. It was interesting, and we all have this problem, but I didn't.
She's got all these users, though, Steve. I mean,
yeah, but
somebody's liking something.
Yeah, but in a consumer market, 100,000 users, 20,000 monthly actives is not a big number.
Well, she's also in Germany, and so I don't know how crowded the space is in Germany. Here, it's incredibly crowded, especially in the Bay Area, and so I would say, the traction here may not be that great. Now, I don't know other areas, but I mean.
I always wonder why companies come here after, like why wouldn't she look at other EU countries first? So just curious, I should have asked her that, I guess.
Because you've got the money.
Yeah? Okay. So there might be something to that. So any other things you liked about the presentations before we start kind of critiquing these guys?
I was going to say, the Jerry Joy, the greater good there is wonderful, and clearly there's been a ton of statistics on, and at least in the United States, on the average age, the growth in that demographic, and the baby boomers are getting older, and there's going to be more people spending in that area. So I think, going with the wave is a good thing, and the Jerry Joy, I think, is in a market that's going to grow and grow and grow, which is good. The only comment I had about that one is about 40% of our deals are healthcare, and for that kind of a market, we tend to like more of a scientific bend to it. Like, if you would have introduced, sort of from a scientific perspective, there were questions about, well, some people with dementia and Alzheimer's, they might not forget it. Some people that are a little further along in the development of the disease may not get it at all. And I think when you're in the healthcare business, I think you have to be pretty scientific about it and represent that you've got a very strong scientific advisory board and people, there are doctors that truly understand this market. Because if you're going to sell it to people in the healthcare industry, nurses, doctors, policymakers, you have to really, really, really know your stuff. And I'm not saying that Victor didn't, but it didn't come across that way.
He alluded to this one-year study, and he didn't dive into it, and we just don't know. We just don't know at this point.
5 minutes, granted.
But Amber?
So I was just going to say, kind of to your point, I think that starting there is great. Like the idea, acknowledging that this is a huge market and that more and more people are having Alzheimer's, and families have to deal with it, and people have to deal with it, and it's extraordinarily expensive. So I felt like that was one opportunity for him to kind of get into the market, but there were other opportunities that were in that space that he could kind of edge into. I don't see the tablet as a standalone solution, and that was kind of the point that we kept going back to, was this supplemental care. So maybe you have doctors as part of your service, or you have nurses as part of your service, and you try to kind of wrap your arms around it a little bit more than what he was talking about doing, and so
he said, he said Alzheimer's, and but he also kept saying dementia,
right?
Which is much bigger than Alzheimer's.
Yeah.
And so
he mentioned the challenge that I'm having is it's along your point, right? The supplemental versus replacing, and you didn't connect the dots for me, right? I didn't see why someone would use this. Maybe it's in the data. He's standing right there, so I'm looking at it. Maybe it's in the data collection, and then I guess pointing that data or making that data available to the primary caretaker or the organization that's involved there. Maybe you'd have something there, but just a tablet in a room that someone could speak to when they're having someone that's caring for them sitting next to them that they can also speak to and ask the same questions. I just don't see the value there. Right.
Yeah, it's more just for the camaraderie and touchy-feely. My first instinct on the first few slides is like, why not just get a real dog?
Right.
I don't know.
But you can answer that. You can answer that question, can't you?
Yes.
Okay.
But I would say, in the defense of the company,
yeah,
we've seen lots and lots and lots of companies in this, I would say, general area. There's a lot of robotics companies now that are providing sort of the virtual friend. No, actually, it's not virtual, but it's real plus connectivity to the cloud. So there are lots of people, and a lot of these companies, again, in support of what Victor's were saying, that there appears to be a lot of people in the medical community that are taking a hard look here. So I don't think this is that out there. I think this is more of, in any market, we're looking at interesting market. Now, who's going to be the winner, right?
Okay, so what makes you think that he might win or probably won't win? Since we're drilling in on Jerry Joy right now.
I think it's too soft. I just don't think there's enough there yet. I mean, I think it appeals to you from the heart standpoint, but I don't see any meat to it yet, and that's a good point. There's just not enough meat there for me.
Yeah.
The value proposition is missing, which I think is what you're getting to.
So I'm convinced there is a value proposition there, and as much as I wish the best for Victor, he just didn't deliver, right? Somehow he didn't make it clear to us,
right?
Because I'm sure we're missing something.
So he started out. He started out with, I wrote notes, but there are too few resources, and it's too expensive.
Right.
Now help me figure out how you're helping to reduce that cost,
right?
And add resources, or or replace resources or whatever. And I just didn't get that. It was a supplement.
It's supplemental versus
so
replacement.
you're adding more capital to it.
Yeah, I think that like the pitch was, or the deck was very focused around like getting people to connect to the problem in an emotional way instead of attacking it from a very kind of rational, practical, economical perspective.
Yeah. Victor's one of those entrepreneurs peers that makes you feel like a jerk when you turn them down.
Yeah.
It's like pulling your heartstrings.
Okay. So enough. Let's talk a little bit more about Ricio. And did he nail everything for you guys, or what do you need to see on Ricio to get more comfortable that he's got something there?
He's very salesy. He's good at selling it. I mean, he came out here and it was just like done.
Okay, is that a good thing or a bad thing?
I think that's good. He was talking.
Really good thing.
I think it's a really good thing. He was very solid in his presentation, or at least I thought he was, in the sense that he was just he knew his data. He came out here. It was kind of just like a steam train of just But I think that there might be some underestimation of that conversion process away from the MLS system, and I do agree that it needs to be disrupted, and that garbage in, garbage out is an entirely valid point. There are other players in the space that are trying to do that too. I just don't have a sense of, because of this salesmanship, if there is a realistic kind of understanding of how to really get that market and change it and be that disruptor, and that could just be a time.
He did seem to have, I mean, he talked about, there was a question about the cost of customer acquisition. He didn't talk about the ratios of, long-term value of a customer versus the cost of acquisition, but he probably had those numbers. And so, again, in 5 minutes, it's very hard to get. I thought he sunk the hook. I mean, I thought there was, it could be a very big market, and you just don't get a sense. I mean, those of us that have been involved, I'm old enough to have bought and sold a house or two, and I know it's a painful experience, and it's fairly low tech, so I'm ready.
Do you think, are you confident that he fully grasps the challenge of displacing the MLS system and converting all of these brokers who are not, known for their cutting edge enthusiasm for technology, right? How many blue-haired ladies, with all respect, to the brokerage industry, right? To the real estate industry, they're not tech-savvy folks.
Yeah, but they do get making money. And if you made a case that, use our product for free for 3 months, and if you see returns, I mean, I'm sure there's a value proposition. But I think there's a lot of questions about adoption. I'm just saying, in 5 minutes, it's a question of, I think we're asking ourselves,
I think it was the most
who sunk
solid.
the hook?
I get stuck on the, and this is a question we love to ask around our table and partners meeting is the why now question. What is the fundamental shift, both driven by technology and in the market, that means now? Because MLS really should have been replaced a decade ago.
Right.
Why didn't it? Why hasn't it? Is it because of mobile? I don't know. MLS is moving in that direction too. So I just struggle to kind of the why now. And as much as Mark did a great job, the trust me thing, I have to a little bit more than that.
So you're not sure you trust? Do you trust him?
I don't know. One slide he threw up there was the traction that he's seen. So I think it was something like up to 6,000 brokers or managers, whatever you call them, in roughly a year. I just don't. It would have been great because there are a lot of other.
And they're still not paying.
Yeah, they're not paying.
Right.
That's one thing.
Right.
But there are a lot of other applications that are doing the same thing. Some that I've talked to over the last couple of years. So it would be great to show our traction versus others. Because otherwise you have no idea if the 6,000 is really good or it's not. And I also would have loved to hear what's the where are they based, right? So is that 6,000 folks in, I don't know, in
He said it was nationwide, but.
Right,
but where's the concentration?
Right,
he didn't seem to have a need for geographic concentration.
Yeah, I would think there'd be a critical mass needed in each local.
But that was the question I asked. I was trying to get.
Yeah.
That was the question about if you're a broker and you go through his system and you use the app and then it's posted to his site, anybody who has access to that data is going to be getting good data. So you benefit from the fact that you have public disclosure of data that's good versus you go into MLS and they may not update it, they may not distribute it appropriately. So I thought there was immediate value whether or not you had scale or not.
Right. So, okay, guys, I mean, it feels pretty clear where you guys are coming out here. I don't know.
I have
okay.
one more quick comment just about, is it Captain
Cook?
Captain Cook. is I think there's always an issue when you have a market. We were talking about how many couponing companies we've seen, at least in the US. It's sort of the elephant in the room question. And all these companies, it's really important to address the elephant in the room. Right. And in the couponing space, it's how crowded it is. Yeah. In the geriatric space is, boy, you know, the healthcare market is so complex, how could you possibly win? And in the real estate market, why now? So I think one of the things that they each could have done maybe a little better is, in all of the, you know, and anytime you do this, what's the thing that people are just going to jump at first and get that out of the way? Yep. And so I thought there was a little challenge for each of them in that area.
Yep, no, good point. Okay, so we're going to have a chance to have more discussion with the audience about all this afterward, but why don't we at this point call the ball and ask you guys, are you ready to vote for who is, you know, who you think the right one is?
Yeah.
Yeah?
I'll start off. I can't remember the name, but the real estate.
Ricio.
Yeah, and Ricio. And I think the reason why is the presentation was crisp. There was a lot of data in the five minutes or however long it was. Answered questions, backed them with some data. And I think if he had more time, we, you know, may be compelled to follow up with at least another meeting.
Okay.
Yep. Yeah. I would lean the same way. Both attraction, and it's an interesting space. Like the why now question is a big one for me, but it is a big opportunity. You know, I maybe don't know the healthcare markets enough, understand those ones, but it is a big opportunity, and someone, you know, Mark is right, someone is going to do this at some point, right? Yeah. So. Okay. All right, Steve?
And I go with Ricio too. I thought that, you know, Jerry Joy was, it's addressing a big market with the quote-unquote wave with the movement, but I just didn't think there was enough on the, we talked about the business model. There's not enough there, so I go with Ricio.
Yeah. And Amber?
I go with Ricio as well, for the reason of it just having the most kind of solid presentation with data and kind of just expertise that came through his pitch. Right. And it made you want to ask more questions.
So yeah, you know, I had a lot of sympathy for Victor and for Paulina, but I think at the end of the day, we all agree that Ricio, you know, did the best job in the time allotted. So to that point, I guess, I don't know if this is a secret or not. Should we open the conference room door and ask Mark to come back in so we can give him a term sheet?
It's not quite a term sheet.
Are we gonna do anything or not?
It's a trophy.
That's not a term sheet?
No, unless someone wants the right one.
It's a piece of glass.
All right, Mark, congratulations.
Actually, I think it's lucite, but that's all right.
I have my wire account information if you want it.
You have your wiring information? Yeah. Well, okay, you know, until we get the wiring information, the best we can do is this. So congratulations. Good job.
Appreciate it.
All right. So, do I
get 30 seconds to? Yes. Thank you so much. Appreciate it. Thanks for voting for me, and hopefully you'll see great things from us to come in the next few years.
Great. Thank you. Okay, so we got just a couple of minutes. I don't know if, or do we have a couple of minutes? Do you want to have a discussion about this, or do you want to just go drink? Huh?
There's a couple. There's a couple.
Okay,
questions.
everybody wants to. I'm sorry. There's a question. Okay, yeah.
So, so first of all, there is a comment that it's amazing, like how much thought did you put into making this decision, and how.
So you're surprised how much thought we put into the decision. Okay. Okay.
That's insulting. To ask is in real life, like how deep do you dig before you make a decision to say no or say yes?
I've got a good answer for you.
Okay.
You might need to dig more to
Yeah.
figure out that there's actually
Right. So I mean, practically, we wouldn't really move quite this fast. On the yes side, we might move faster on the no side. But you know, so the question is, you know, in the real world, how quickly do VCs go?
I have just a.
How much? Yeah.
So I would say this. You know, all of us are going to speak for our firms, but I would say this, that in my experience, my 5 years doing this, and another 10 years of being on your side of the table, being an entrepreneur, I believe that the highest probability of you getting funded is from someone who knows your space and likely has been following you for a while. So the chances of you walking into a firm cold and they've never invested in this in your market, there's no amount of diligence they're going to be able to do fast enough to address what you need. So the fact is, you're probably going to go to someone who knows the market, and they're going to obviously fill in and call customers and do personal references and that kind of stuff. And that could take a few weeks to a month or so. But the net is very unusual if some, especially at a VC, VC kind of the smart money, is not going to be able to. I wouldn't be able to convince my partners if it was a space I didn't know about to convince my partners that my decision was worthy enough to make the investment.
Yeah. So, and I think practically speaking, again, we might get to a no fast, but what would have happened is, one of the guys in the partnership would have been said, if you really want to chase this, why don't you answer this question, this question, this question, and come back to us, in terms of process. Mm-hmm. So you're going to get, from the entrepreneur's point of view, you're going to keep getting these iterations, and at which point there may be a no after any iteration, and you just don't know how many iterations before you get to a yes is the problem. Did you want to add something, Kevin?
I was just going to add that it really depends on the stage, obviously. Like very early stage decisions can be made fairly quickly if you have a conviction and instinct on the space. I think there was a chart, I forget who blogged it, but I love it. It talked about the early stage investing. It's really built on kind of a conviction versus data. And the earlier you are, it's pretty much all conviction. And then as you hit a Series A, there's more data introduced. As you hit a Series B, you're pretty much, a lot of it's about the data. And so at the very beginning, you just need to find those investors that already have conviction about what you're doing. And that's going to optimize your fundraising process immensely. So it's, I like the kind of the analogy of don't go out there trying to be an evangelist and get everyone to convert to what you're drinking. Go out there and find the ones that are already drinking the Kool-Aid, and you're going to have a lot more success in raising funds.
Okay, a couple of other quick questions, okay? Yeah.
Question and piggyback on what Steve said is because the geriatric group is becoming such a big, evident place that would you offer to find? I think all of them are singly; they're on this on their own. Would you look for somebody else to help them do more diligence to bring it together and partnership? We don't use the word partnership, but to partner with someone else who's got more invested time in it within your group or outside or in the valley.
So are you saying so in other words, if we think the company's not quite ready for our particular firm to invest, wouldn't we give them guidance and help? All the time. I mean, it's in our best interest. If we have a good feeling, but we're not quite ready to do it, in a second, because maybe in 6 months or maybe a year, it comes all together. Absolutely.
It's a great test as well. This is a little dirty trick VCs use. I love this one. I was taught by a great VC with a lot more experience than I had at the time. And if you give them like a little niblet of something, a resource, whether that's a connection or whatever it is, right? And then you check back in kind of 3 months and see what they did with that resource, right? Because at the end of the day, being an entrepreneur really means being incredibly resourceful with limited resources, right? So you give them a little niblet of something and then see what they turn it into. And if they come back in 2-3 months and turn that little introduction into like, a huge partnership or something like that, then that's impressive, right?
Yeah, or the Steve Jobs methodology.
So there was one, I guess, last question? No more questions? Okay, one question, and then it's drinking time, I'm told. So, okay. Last question.
So, just out of curiosity, is there ever a time when intuition beats data? When you say, for example, you say...
Yes. Every seed deal we've ever done.
Yeah.
You're playing on the house's money or not?
The Captain Cook thing is a very crowded thing. A lot of businesses are going into that area, but still our intuition.
Okay, so will VCs let intuition trump data?
Yeah.
And
Yeah, I don't know about Trump data, right? But when you don't have data, what else do you have to, you don't have much else to go off of, right? So in those cases, yeah, intuition matters a bit more. When the company is older and they have data, the space is more mature and there's data in the space, then obviously you're going to lean towards that stuff. And to be, you want to be prudent and you want to be responsible with the capital that your firm is deploying. So to ignore the data and just say, I like...
But sometimes, as you said, the market's pretty crowded,
right.
it's complex, but you still have a feeling like this could be something.
Yeah. member?
I was just going to say that sometimes that becomes more critical. Let's say you have two companies that you've invested in that are somewhat competitive in nature, and you have the data, and the data's looking good. And I think that at that point, sometimes it does come down to like you have to go with your gut and kind of your hunches on you have all the data, and you don't know which one's going to kind of make it or which one's going to be the one that survives. And so sometimes you have to go off of, but I think it is, to Steve's point, I think it's partner dependent.
Yeah,
Okay,
I
last
think
comment.
once
Yeah.
you get down to that point, though, it becomes a relationship, right? So which one of these founding teams do I have a better relationship with? Do I trust more?
Yeah.
Do I believe in my gut will be more successful?
Yeah, that's exactly right.
Right. And so just to, yeah, I mean, the issue is if you just, like with Jerry Joy, if you have the intuition that there's something in the space, you may be inclined to want to invest in that space, but if the entrepreneur does not give you really good answers, you know, even though your intuition, the space is good, you know, that's data about whether or not this is the right horse to back, right? There's some of that goes on, just to be honest about it. But with that, I'd like to ask you if you would join me in thanking our distinguished, esteemed panelists. It was great. It was great fun working with them, working with you, working with the entrepreneurs. One last congratulations to all three entrepreneurs. And with that.
Okay, so thank you, everybody. I want to thank the Startup Conference team, all the volunteers, our hosts, our sponsors. We'll be back next year again. If you enjoyed the interview in the tent, I've done about 100 of them. They're on our site, and we're going to be doing them monthly as a meetup. And then we have a special one that we're going to do at our conference, PitMe Catalyst, November 3rd. Anyway, hope you guys had fun, and thanks to all of our speakers. Thanks for making time and all the great feedback. Appreciate it.